audio test here right now. Hopefully you can hear me. Please let me know in the comments if you cannot hear me. Okay, thank you so much. Turn down this other speaker here. So happy Friday. Happy November. We're into November. It's hard to believe. Okay, great. So let's see. First of all, we're going to start out by going over the solo 401k qualification process. So hopefully you can see this on your screen. I'm going to be going through some slides. About qualifying for a solo 401k. Okay, so of course the starting point for any type of solo 401k discussion is you need to be eligible to set up the plan. So a 401k is for self-employed persons. So you could be a realtor, or you could have a dog walking business, or you could really have any type of business where you're providing goods or services and making money based off of your personal effort. So really, there's no need for a formal legal entity. You could be a sole proprietorship. It could be a partnership. It could be an LLC. Thanks for the feedback, Kendra, and letting us know you can hear the audio. So the other piece of it is that you can't have any full-time W-2 employees working for you. So full-time, for purposes of the solo 401k eligibility rules, is going to be working 1,000 hours or more. You can also have a spouse that participates in the plan. In order for the spouse to participate in the plan, the spouse is also going to need to be working in the business and reporting his or her own separate self-employment activity. For example, you could have 2 Schedule Cs, or if the business is, say, set up as an S Corp, each person would get their own W-2, just to give a couple of quick examples. So now let's turn to earned income. So this goes back to the point that a 401k is really for people who work, or in the case of self-employed individuals, a solo 401k is for self-employed people. So you have to have that earned income. So if you are just day trading stocks, for example, and you're making money off of money that you already have, that's not earned income. Earned income is where you're making money based off of, say, providing goods or services, based off of your personal effort, and you're actually reporting that income on your taxes, paying self-employment tax. That's really the key. So on this slide here, we've got some examples of earned income. So for example, a real estate agent, or maybe a doctor. Like the real estate agent files a Schedule C. The doctor gets a 1099 miscellaneous. So those are common examples. And again, if you don't have any full-time employees working for you, then you could set up a plan. There's no real minimum amount of earned income. And really, you need to just be pursuing self-employment activity. Again, reporting that activity on your taxes. So you don't have to necessarily have a huge amount of self-employment income. It could just be $1,000 per year. The key is that it's legitimate and that it's consistent. It's not just a one-time event. You just don't go and sell one property as a realtor. You really have to be pursuing it consistently and indefinitely going forward. So that starts us out with the eligibility. Now let's turn, because this is a timely presentation because of the upcoming December 31st deadline. So here we're going to flip over to a different slide. So let me see. This is our first live stream here, so there might be a little technical difficulty. I appreciate your patience. I'm going to think I may need to reshare that screen. Here we go. All right. So the December 31st is the deadline to set up the plan. And so we're going to talk about what that means. So really what that means is setting up the plan really means just signing the documents, because a 401k, it's essentially a legal entity. It falls under the trust umbrella. So all that you technically need to do is you need to sign the documents before the end of the year. And we make that very easy. For example, we have an online application process whereby you just need to submit a quick 10 questions on our website, and we'll email the documents within 1 business day. You just need to print those documents out and sign them by the end of the year. And that's going to preserve the right for you to be able to make contributions for 2019 all the way up until your tax return deadline. And we'll talk about that in a couple more slides ahead, but there's a lot of misconceptions out there. Sometimes people think that they need to get the EIN number for the plan, or maybe open up a bank account or a brokerage account. All of those steps can be deferred until 2020. And the basis for this is really very clear under IRS Publication 560. IRS Publication 560 is your landmark guidance for solo 401k plans or other plans for self-employed individuals. So there's actually a chart on page 3 of IRS Publication 560, which makes that clear. And we've got a screenshot of that chart here on this slide, where you can see when to set up the plan. Qualified plan, defined contribution plan, that's what a solo 401k is. You just need to set up the plan by the end of the tax year. And then their last day for contributions, as you can see on this chart, is going to be the due date of the employer's return. So that's going to be, in other words, your business tax return deadline for your self-employed business. We'll talk about what that means in a moment, a little bit more detail. So these next couple of slides just hammer home the point. So for example, do I have to obtain an employer identification number by December? No, you don't. All you need to do is sign the documents before the end of the year. That's going to preserve the right to be able to make those contributions anytime up until your tax return deadline. You can get the EIN number. We get that for our clients. You could open up the bank account or the brokerage account. We make that very easy. We prepare all the paperwork that's needed to open up that bank or brokerage account. So it's all pre-filled out. That really easy. So here's a good question that we sometimes will get. If I adopt the plan in December, how can I make contributions based on income that I earned in January? So let's say you sign up here in December. The plan, which is the industry best practice, is really going to be drafted to be effective as of January 1st, 2019. So you would be able to make contributions for any income that you earn and report throughout 2019. So that's really how it's done in the industry, and it's not going to be a problem. The key, again, is just signing the documents by December 31st. Okay, here's another good question. My CPA tax advisor is informing me that the employee contribution must be made by December 31st. Are you sure that I can make this contribution in 2020? So this is a common point of confusion, because a lot of times CPAs will be thinking about the rules that apply to full-time employer plans. For example, if you work at Microsoft or Coca-Cola and you're an employee there, you're going to have to make your employee contribution by the end of the year. But the rules are different for self-employed individuals. And really the basis, again, goes back to that chart on page 3 of IRS Publication 560, where you can see that both the elective deferral, which is another word for the employee contribution, as well as the employer contribution, just has to be made by the business tax return deadline. And from a common sense perspective, that makes sense too. A lot of people who are self-employed, they may be earning money all the way up until the end of the year. They may not know how much money they made until after the end of the year when the dust settles. So, so the rule, is very practical as well. So you're definitely going to be able to make both types of contributions all the way up until your business tax return deadline. So that'll take us over to another good slide here where we can talk about that deadline in a little bit more detail. Let me make sure that again, appreciate your patience with the potential technical difficulties here. Let me see. All right. I think that's going to flip it. There it is. So the solo 401k contribution deadline, I keep referring to it as the business tax return deadline. Again, assuming that you would have adopted the plan before December 31st. So this, especially if you have a separate type of entity for your business, of course, if you're a sole proprietorship, that's going to be the same as your 1040 deadline. But if you've got, say, an S corp or a partnership, it's not necessarily going to be the same. So on the second slide here, we've got a chart that really gives you all the detail you'll need. So, and what's nice is that it actually will be extended if you file a timely extension. So the simple case is the sole proprietorship. You're reporting your self-employment income on your 1040. So it's going to match up with your April 15th deadline or October 15th if you file a timely extension. So you could set up the plan here in December. You could circle back, say in March. We would get the EIN, like with our clients. We would help you get that bank or brokerage account set up. And then you just have to make the deposit by April 15th. And then you report it on your 1040. For a partnership or an S corp or an LLC taxed as an S corp or a partnership, it's going to be the business tax return deadline. So that's the date by which you would have to have deposited that contribution. So that's either going to be March 16th or September 15th if you file a timely extension. And then if your business is taxed as a C corp, it's going to be April 15th or October 15th. So those are important dates to keep in mind. Okay, let's spend a little time talking about the mechanics of the opening process. We've got a nice infographic that we've got on our website, which goes over that. So that's going to be in a different set of slides here. Give me 1 second while I flip over to that. All right. Well, we've got a question here in the chat. So single member, let's flip back over to that chart. Thanks for that. Good question. Let's flip back over to our deadline chart here. Single member LLC. Okay, you got your answer. Okay, great. Yeah, it's going to be the if it's a single member LLC, that's a disregarded entity. So that's the same as a sole proprietorship for purposes of these rules. So I think there might be a little delay with may have missed it, or there might be a delay on the audio. So thank you for your patience. Now let's flip back over to the opening process. Okay, so this first slide here just covers, again, the eligibility. You got to be self-employed, no full-time employees. Spouses can participate if they're also working in the business and reporting their own self-employment activity. So now let's talk about the mechanics of the setup process. So on our side, we have an online application, very simple, very easy. We capture the information that we need to be able to draft the documents. So that's step one. And these first 4 steps, by the way, we will handle these within 24 business hours. Then the last couple steps are between 3 to 10 business days. And so we'll talk about the reasons for that variation in a moment. So you got our online application, which is step 1. Step 2 is we will draft and prepare the 401k documents. So those are all those documents which are going to create the plan, are going to create the trust. We have a set of IRS approved documents which allow for alternative investing, loans, Roth contributions, et cetera, et cetera. We go ahead and obtain the EIN number from the IRS, and we email that. We email a link to our secure website where the individual is able to download the documents, sign them, and then upload them back to our secure website. Or they could be faxed in or emailed, of course, as well. So that's all that needs to be done, again, by the end of the year, and that actually creates the plan. Step 5 and 6 can be done right away, or you could wait till you're closer to your contribution deadline. So we don't hold any of our customers' money, but the money does need to be in either a bank account or a brokerage account, or you could even have both types of accounts that's set up under the name of the plan and under the tax ID number for the plan. That goes back to that EIN number, that separate EIN number we get for the plan. So with our customers, we don't have like one place that everyone has to go to. So, some people to say a big national bank like a Wells or a credit union. For other people want to have their accounts at a brokerage, for example, like say Fidelity or Schwab. So they'll just let us know. We can go over the pros and cons, with each person's situation. They'll let us know where they want to have it. We would prepare all the documents and email those to the customer right away. A lot of times it could be same day or next day at the latest. And then what they'll do, they'll all be pre-filled out. On the brokerage side, all they have to do is sign it, and then the forms get submitted to the brokerage. The brokerage can take anywhere between a couple days to open the account to sometimes a week or so, depending on their processing times. A lot of times as you get to be like April 15th, like these brokerage firms can be really busy and the processing times can get out there. Bank accounts would be, the process there is that the bank would need, like we have a bank guide, we have a certificate of trust, we would put together this packet, email it to the customer. You would just need to simply forward it on to your banker. We typically recommend getting an appointment set up with your banker, forwarding on the packet to the banker, and then we can be on the phone when you're at the bank. And the bank is really just like the brokerage, they're just providing the account. So it's not a 401k plan provided by the bank or the brokerage. They're just providing that account. So they're going to be the custodian of the cash. So when you go to step 6 to fund the account, on a separate and parallel path, we would go ahead and start the transfer process. Let's say you had a former employer plan that was at Fidelity. Well, Fidelity, 99% of the time, will take the transfer instructions over the phone. So we would call Fidelity with you, and then they would cut a check payable to the name of the plan, and they would mail it to you. So you would just take that check to, say, the bank or the local brokerage branch and deposit it into the account. And then once the funds clear, you could start investing right away. So that's really the process there. And that's why you do see some variation with that final step, is because sometimes the company that's holding the money they'll take time to process that transfer request, mail the check, time for the check to clear. So, okay, we got another good question here from compound value investors. So they don't. So I'm going to cover that. So when you are moving money from a former employer plan, they're always going to move it by check. And so when it's going to a new employer plan, that's actually a red flag. Sometimes you will get some person that is looking to be helpful, and they'll say, yeah, we can ACAT it. The issue is that these companies are, they have a reporting obligation. So when they move that money, they need to tell the IRS. And that's why we like to be involved. I mean, besides just customer service, we want to be involved because we do this every day. We want to make sure that they report it as a non-taxable direct rollover. So that would be issuing a 1099-R with a code G to let the IRS know that this money is um, not going to be taxed, that it's coming over as a non-taxable transfer. So usually when they are reporting ACAT or wire transfers, they're going to report that as a distribution. Now, the ACAT is a specific type of way that these companies move money between institutions, and that's referring to an IRA to IRA transfer. You're not setting up an IRA here, you're setting up a 401k. So if you're moving money via an IRA, again, that's going to be done by check. Now, there is one exception. Let's say you decided you wanted to have the brokerage account at Fidelity. In that case, if you had another IRA at Fidelity, once that brokerage account is set up, the money can be moved internally because it's inside the same institution, from that one IRA at Fidelity to the new brokerage account for the 401k at Fidelity. So hopefully that answers your question. Okay, well, I really appreciate everybody joining. Have a great rest of your day and a good weekend. I don't see any more questions in the chat. So we'll go ahead and post this. I think YouTube will do it automatically, and we'll be looking to do more of these. So please like this video and follow us for more videos like this. Thank you so much.